Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea. And today, working all weekend, the team, led by Giuseppe, the team is just incredible. Everybody worked. Isabel Lee was in with our final interview here from our cross-asset team, and she said they literally worked the entire weekend. There's no other way to put it. And we thank all of you for listening. We're having record audiences, humbled by that, particularly out on YouTube, where you can subscribe to Bloomberg Podcasts. We made a decision in the vicinity of happy hour on Saturday that we would not do an academic Monday. We worship our academic guests. What a week last week with David Blanchflower, Doug Irwin from Dartmouth. I believe, do we have scheduled this week, Professor Krugman? We have the laureate Krugman with us at some point this week, and on we'll go. But today we said stay on the markets, and you start strong with Damian Sassower.
It's just about the fixings. The PBOC
what
every morning.
Mean?
Okay,
Jargon.
so China will set its currency. It manages its currency, Tom. As you know, there's a 2% band around the China yuan that it can move each and every day before the government basically closes it down, circuit breakers go up. And so, what they do is they set that fixing every day. China yuan is trading at 731, 732 now, but they just crossed that red line on 720. If they're going to start allowing the fixings to gradually move higher, that tells me everything I need to know about currency risk.
I can't say enough how important it was. I went to Giuseppe, I said, that's got to be our first quote. I was stopped all weekend with, the basic what's going to happen and that. And I don't have a market call because I know they're worthless. It's part of the, the framework of Wall Street and that, but it's not my job to have a market call. What I will say is the common feature of every crisis. And when I started studying this, folks, to put things in perspective, one of the four great currencies of the world was the Lebanese pound. Good morning, Nasib Taleb. The Lebanese pound. And the answer is things change. And the way they change is you look at the litmus paper of the system, which is the currency market. And Mr. Sassower there of Bloomberg Intelligence, doing all our EM work, went right to the heart of it, which is watch the renminbi, the Chinese yuan. And to go from 7 up to 7.30, a weaker yuan, and depreciate, and to go out further is not unimaginable. Given this trauma, could the yuan get back to where it was in, I believe, 2015 or 2005? I honestly can't remember, back when it was unpegged a decade or more so ago. Damian Sassower, he'll be with us, I'm sure, more through the week. Many people helping us out today with a cross-section of opinions. I tried to stay away from the Fed parlor game. Guess what? It doesn't matter right now. I just don't think it's germane to the debate. Here is from RBC Capital Markets on the equity market collapse, Lori Calvasina.
The reality is that, when I highlight this small cap chart and that we're at 13 times, or at least we were as of Thursday, people say, well, we have to adjust the earnings. And I say, I know we have to adjust the earnings. That's a separate thing, though. If you look at, sort of historically, my forward PE data, 11 to 13 times is where small caps tend to bottom out, even when the E is too high. And people just can't mentally wrap their heads around that. But it is something important you have to keep in mind, because it's one of those things, again, that you have to see. Right. It's not going to peg a bottom on its own. Right. But it's still a signal, even though there's some problems with the E. Now, I do think with earnings, we have to get the numbers down before anybody is going to have faith to come in and buy here. 40% of the revisions in both the Russell and S&P are still to the upside. Nobody's cutting numbers because they don't, I don't know, a lot of different reasons, but nobody's been cutting the number.
That's a really important insight. Lori Calvasina, RBC Capital Markets. I thought Michael Purvis was great on this, and a number of others. Keith Lerner from Truist was wonderful. This is all happening so fast. Let me explain this now. I think it's incredibly important. The financial media talks percent change of the indices. The SPX is the most mathematically integral indice. We use the Dow because America is riveted to it from our past. It's not as good an index. I get it. And we look at percent change. A correction is in the vicinity of 10% down. A bear market is 18% down. And the kind of washout you get in a sequential crisis is down 35% or something like that. The pros don't do that. They do a thing called standard deviations. I'm not going to go into it on a podcast, but the answer is we are at a point of stress in standard deviations, down 3.6, 3.8%. I know those are just numbers. And where we get stressful is down 4 standard deviations. We're not there yet. I'll tell you when we get there. On your commute across the nation, thank you so much for listening, particularly to 99.1 FM in America's Washington. On YouTube, subscribe to Bloomberg Podcasts. And on YouTube Podcasts, it's single best, I hear.